Today, finally we complete order block, breaker block, and the mitigation block triangle. Most common block-based price action trading strategies for day trading and scalping. In the first section, we'll talk about bullish and bearish mitigation blocks. In the next session, I'll teach you how the mitigation blocks work. In the final section, we will focus on two different trading setups and strategies for day traders and scalpers. We have so much to do. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. Our subject for today is the mitigation blocks. It is the part of order block and the breaker block supply and demand family. But if you look for more than supply and demand, check out my free trading course. You can find the links on Google Drive or directly from my website, which is in the description. And please try to watch videos in order to understand everything clearly. Okay, let's understand the mitigation blocks. It is in the family of breaker blocks and order blocks. Basically, a mitigation block is just a form of a breaker block. But how? Let's quickly remember the breaker blocks. Once the price reaches a new higher high with the latest break, as you remember, an order block comes into existence. If this order block fails to hold the price, it becomes a breaker block. So, what is the mitigation block then? It is actually the same thing, exactly, with a single difference. This time price fails to make a new break, a new higher high. Instead, it makes an internal swing and breaks downwards. So this same red candlestick now becomes the mitigation block. I hope it is all clear. Let's see an example. Okay, please pause the video and identify the mitigation block in this example. These practices are critical for you to identify these structures quickly. First of all, you have to visualize the market structure in your mind. No need to draw it. You have to improve your ability to identify them from your mind. Secondly, you can see where the major breaks happen. You can see the mitigation block right here, which creates a very strong supply area. Price comes into these zones and reacts twice. Now, let's see the bullish mitigation block. I will not repeat the whole process. On the left, you can see the breaker block. Very simple to identify it. On the right, what happens is the price cannot make a new break, a new lower low. Instead, it makes an internal swing. So the same candlestick, the breaker block now, becomes a mitigation block. Let's see an example to understand the chart. Let's visualize the overall market structure. Please note that you do not need to think of perfect structures with perfect higher highs or lower lows. Real charts are far from perfect, and they could be quite complex. Identifying breaks is crucial. You can notice the high quality of this internal break here. And the green candlestick right here creates our mitigation block candlestick, which also creates a strong demand zone. You can easily see how the demand zone holds the price before its new rally. One of the main questions is, but how? What is the idea behind the mitigation blocks? It's again retail trading. You can see the clear retail trend line on this chart. These trend lines are drawn differently by millions of traders every single day. How do you trade a trend line? Basically, you wait for the price to touch trend support or resistance and place your entry. Does it work? Sometimes it works, sometimes it does not work. One of the key points of identifying strong trends is the quality of new breaks. Are they strong enough? As you can see in this chart, there is no even a new break. This is your first signal of trend weakness. Instead, the price makes new lower low, changing the course of the trend. This is how a mitigation block, a new supply area, comes into existence. What do you see here? Please look carefully. Well, it's actually a head and shoulders pattern, and a much better entry point with a mitigation block. As I already said, every chart pattern is born out of price action. To be honest, there is actually no such a thing as a chart pattern. They are all price action based concepts with easier representation to new traders. However, trading these patterns alone could be dangerous. This example is crucial to understand the retail mindset. Now, as you can see, there is a trend line right here. The main problem with trend lines, they are quite subjective. I could draw 10 different trend lines here. Every trader has their own standards to identify patterns and lines. For a trend line trader, one of the most common expected entries is from the trend support. Wait for the support touch and some reaction, then place your entry. However, as you can see, the last support is not strong enough to push the price above, to create a new break, a new higher high. Instead, it's coming back to trend support after some profit run. This is your main trend weakness signal. The price breaks downwards and creates a new lower low. Now you can identify the mitigation block and the overall supply area easily. A nice zone to look for entry. By the way, you can also see the head and shoulders pattern. If you are a chart pattern trader and enjoy trading head and shoulders, I just give you a special entry method with mitigation blocks. In my opinion, mitigation blocks are kind of weaker than breaker blocks and order blocks. This is why they should be combined with other price actions. Especially checking the left of your chart is crucial to see what is happening with the price itself. In order to use a mitigation block, I would like to see a form of swing failure pattern or stop loss hunt before opening a position. This would be enough power up for the price to move down or up. But again, nothing is as easy as in these charts. We'll need many other confirmations to enter a trade. Let's see an example. Okay, I especially choose these examples to show you how much practice you need to master the charts, because real charts are really confusing looking and far more complex than the drawings in PDF documents. Firstly, you can see the sort of stop loss hunt here. Price just goes above and cannot hold itself long. You can witness that price cannot make a new higher high. Instead, it makes lower low with a high quality break. This little tiny red candlestick is our mitigation block, our supply area. Again, it is not wise to jump to trade directly. Of course you can do it, but you need quite a large stop loss for that. Other than that, always try to wait for a micro market structure break or break of structure. Now, if you look closely at this area, you can see the order block. There is actually another hidden mitigation block here. But it is a quiz for you. If you find it, just type mitigation in the comment section. Now assume I made an entry from this micro order block, then where can I target? My eyes are always looking for untaken stop losses and unfilled imbalances. You can see the large imbalance right here. A nice target to aim for. This could be a great 2-3R profit. If there is no stop loss hunt or swing failure pattern, I would like to see a very strong supply or demand area that comes from the left of the chart. These could be giant imbalances, anything from the block family, breaker block, order block, or even other mitigation blocks. Or it could be a very strong break and SR Philip area. All these concepts may change from chart to chart. It is impossible to say this one thing should happen when we enter a trade. Trading does not work like that. All charts are different and dynamic. This is why you should know every single price action concepts and identify them quickly. This is another complex trading example. If I remember correctly, I took this trade with a similar entry point. I have to check my account statement. Maybe I will do a very detailed video about this trade in the next video. Okay, let's see. Always check the left of the chart first. A very strong break catches my eye. An incredibly strong and powerful red candlestick right here. Of course, the imbalance. The reason I like high-quality breaks is not the big and giant candlesticks. It is actually the giant imbalances it creates. Now you can see that it creates multiple supply areas, order block and a breaker block. With that supply area, another price action structure appears, the rally base drop, which also has multiple different internal breaks inside. Now at this point, where is the mitigation block? Pause the video please and type the mitigation in the comment section if you can identify the mitigation block here. Yes, this red candlestick is our mitigation block. Now with multiple supply areas and strong price action, we can look for entries easily. You can notice the swing failure pattern right here. It is very obvious and powerful. We have an overall entry area, but where can the price go? The giant imbalance will have a pulling effect on this trade. My stop loss would be quite high for this trade. This is a good 2-hour, 3-hour trade to take. Nowadays, I just took so many trades. I will look into it and try to go over all the details in the next video. Okay folks, this is the mitigation block. Now we completed the order block, breaker block and the mitigation block family. These are the most popular trading strategies commonly used in the day trading world. So you can use it as a day trader or scalper, or even as a swing trader to identify the key zones. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.